Whoopie-doo, hoity-ho, how you doing, folks? Good to be with you again for TTR UK session. And this is Jeff coming to you live from Hobart in Australia. Well, just north of Hobart, to be fair, in the beautiful little hamlet village, one of those, of Dromedary. And you wouldn't believe it, it's very dry here in Dromedary. I kid you not, it just won't rain. Bactron, Dromedary. Two humps, one lump or two. I think it's two for Dromedary. We'll go with that anyway. What's happening today around the traps? Be joined by Ash, of course, very, very shortly. But first up, let's go to the charts. Not the charts. Let's go to the Forex Factory and relive yesterday, basically, where the Kiwi took off like a rat up a drain pipe and still haven't really worked out why. I don't know if it's corrected that yet. I think there was probably some hint of that yesterday later on, but we'll check in on that a little bit later. But the main event yesterday really was all about the pound, and the CPI figure was a miss to the downside. The PPI figure, the producers pricing index, and the retailer pricing index, both negative as well, or down on forecast and certainly down on the past in terms of the retail price index. I don't know if it's the CPI figure that would be concerning as much as the trend. And I had a little look at this graph, and the trend is a little bit concerning, one would think. I don't know that we're headed towards the 2015 lows here around about the zero mark, but it is definitely coming off. A little bit of a spike there in September of last year, but it's been all downhill since, and that might be a little bit of a concern. We'll see what the market thinks of that. Well, immediately the market, I think, if we go and have a look, well, before I do that, let's see what's happening today, shall we? Retail sales coming out of the States. We've also got a little bit of medium level news. It's already happened. Germany prelim GDP figures have already been released. Why isn't that showing in it? Maybe I should update it. It might help. And in about 2 hours from now, we've got Monetary Policy Committee member, I can't even pronounce that, Mr. V, or is it Miss V or Ms. V? I don't know.
I think the V is silent.
Is it? Leahy.
Maybe just member Lee.
Lee.
Or Lee, yeah.
Whatever. Tooch or.
I've never heard of him, mate. So I'm guessing as well.
Well, this must be an important announcement then. If we can't pronounce his name, then it must be important.
Yeah.
How you doing, Ash?
Yeah, I'm doing well, mate. I'm doing well. Do you know what I heard? I was in early actually. I heard your intro about the dromedary, and I was quite gutted. I couldn't interject. I actually tried the webcam. I tried to put the webcam in, and it somehow muted me out. So doesn't seem like I can get my webcam going.
That's a blessing. I can probably get mine going.
Yeah.
Does mine work?
Let's have a look.
I can't see anything on my camera. It won't come on either for some reason.
Oh, maybe it's another glitch of Google Hangouts.
Whew. Thank God for that.
Yeah, I mean, it's we're probably looking at a secondary broadcaster or a primary broadcaster or editor, and then this becomes the broadcaster. I guess I don't know which way around you'd say it, but maybe there's other ways. It might be because my webcam's got a mic in it and it was trying to pick up the mic. But anyway, mate, back to it. I'm doing very well.
Awesome. Now, one question whilst I've got you here, and I'm actually in the YouTube channel, the Actions to Wealth YouTube channel, and I can't find this broadcast. Where do I find it?
Okay. Can you see any broadcasts?
I can see recording of yesterday and
okay, great,
of Tuesday and Monday.
So if you go, I mean, mine's the very top one at the minute. It says live now. If you scroll down and find one that says live now.
No, I haven't got that.
You haven't got that? Okay, all right, no problem, mate. I will do this for you.
What are you doing?
I'm going to send you going to send you the link.
Maybe I need to subscribe, do
Quite possibly, yeah, quite possibly. I think I might be a subscriber. There's the link.
Subscribe. Okay, just let me update this before that happens. This might be a good exercise for me because I could then advise people. All right, that doesn't work. Okay, I'll go with the link.
Actually, I'm not subscribed. Subscribed.
Oh, I'm in.
Yeah, well done.
Can't say anything, but I'm in.
I
can't see a screen.
Oh, is that's because that's
Now I
because
can.
my screen isn't yet activated. There we go.
Yeah, and there's still this annoying thing, and whenever you talk,
yeah, do you know what I
goes
tend to do? If you're having a longer session, I tend to mute. If I mute my mic, then it allows, it won't pick up any sound, obviously, then, and then it will keep it on your screen while you're describing. So,
right.
Yeah, that's the best thing to do. So I will mute now, but obviously I've got trigger fingers and I can come back whenever you need.
All right, mate. You stand by there because you never know when I'll go into panic mode and you'll have to rescue me or something. Retail sales, yes, that's coming out in about 5 hours, 6 hours, 5 hours, 6 hours. I'll get it right. Make that 5 hours and 53 minutes from now. We'll get all of that. We'll get the purchasing price index and retail sales coming out at that time. There's some stars here. We better see what that means. Release date delayed by 28 days due to US government shutdown. Okay, so we didn't have it 28 days ago. And that'll be the same, no doubt. Yep. Okay. So they're delayed figures. Don't know if anybody knows what they are as a result of that, but we'll watch the markets at that time. No, I actually won't because I'll be out of trading by then. I should think. Depends on what happens, of course. Tomorrow, retail sales out of London town. Now, speaking of London town, let me go to cable. And the reason I want to go here is those numbers, which, as I flagged before, were not good, and the CPI trend is not good. It's trending down. Yet, I'm assuming that was the news right there, that candle. I wasn't in front of the charts, obviously. And didn't even hit resistance or strong resistance, which would have been the weekly pivot, and then straight back down. Why it rallied at that time is beyond me, but then so are a lot of fundamental things that happen beyond me. And I suspect that will continue to be the case. And at the end of the day, the pound did pretty much as you expect it would on the back of that news and lost ground, not substantially though. And that brings me to today. It actually did not go through this level here, which we flagged on Monday, I think, maybe Tuesday. And Ash, you were talking about this level as one of your new toys, 1.2847.
That's right.
We're still there, mate. We can't get away from there.
And yeah, do you know my actual level is 128.20 was as not necessarily as low as I'd go, but that was a level that I quite liked because of the inverted head and shoulders, and obviously there's going to be some slight nuance with that particular number, but it is where I'd like to trade it. You know, if there's an area to go long on the pound, it's certainly in this particular area.
But it wasn't one of you had a new tool. I'm sure you had a new tool, and that was the number that it came up with on cable, 1.2847.
Oh, I did?
Yeah, absolutely. I remember it clearly.
Oh, you remember what the tool was?
No, no, of course I don't. But whilst you're thinking about that, I'll go on with my little bit of analysis based on the news yesterday and this number, 128.47, which we, of course, have no idea what it means. But if Ash finds it, great. It is
Yeah.
it's a significant figure. Look, I've got it as a significant level anyway, not as significant as I would like to see it, but it's certainly got form. It's got support, little bit of resistance, support through here. Resistance. I'm going upside down. Support. You know what I mean. It bloody well stops it. So resistance through here. Hung in there a fair bit before the resistance broke. Now we're back there. I'm still, and I go back to what I said weeks ago. It is weeks ago now. As soon as this formation occurred here, on the back of this one, I was looking for a higher low. On the back of this one, I was looking for a higher low. Really got a higher low on a candle that's untradeable. In fact, I wouldn't have considered trading that because it came too quick anyway, but it was just completely untradeable. So I really haven't had exactly what I was looking for. And this shapes up pretty much like what I was looking for, a significant higher low. It's in a very awkward place under very difficult circumstances, the fundamentals that I just mentioned, not to mention the B word. But I'm, for some weird and wonderful reason, bullish the pound today. In particular, I'm bullish the pound against the euro, or I was this morning. But I noticed the euro has had a bit of a rally off a new low, a new significant low at that. So I'm just a little bit on the, okay, what the bloody hell is going on here? Look at these candles on the euro. This is the daily chart. So we've had a topsy-turvy week, culminating yesterday, I suppose. Well, the week hasn't culminated, but the day culminated, if you like, in an extremely bullish bar that has set a new low in terms of the bottom of this rectangle, in terms of this low that we were looking at yesterday, suggesting that there was a bounce. Well, we suggested there was a bounce on Tuesday, and that turned out to be the case, of course, but straight back down and with interest, it would seem. But since then, we've had a bit of a rally back to the daily pivot. Now, I've completely turned around this cross where I've been bullish. I can't remember when, long time ago, and we got some bullish price action. Finally, off the bottom of this range. Then we smashed straight through it. Now we're back testing the daily pivot. Am I really going to abandon my bullishness and look for a short here is the question. I think the answer to that is no, not yet, because whilst ever there's bullish signs here, I'm probably still waiting for a signal to go long. But that said, we are definitely creating new lows now. And if I go to euro pound, on the back of what I've just said, bullish pound, not sure euro, but various signals. This is the reason I placed this order this morning, based on the relative positions. I won't say relative strength, but I also had this on euro pound. Big break short through the daily pivot, through the weekly pivot, and then an immediate response from the buyers back through the weekly pivot and testing or retesting, if you like, the daily pivot. But not only the daily pivot, the bottom of this channel that we've been following, and you recall how strong this level has been. Bang, 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 and finally through. Now the retest. I find it impossible for me not to take a position here. Because I think this is a very strong signal that if, and I'm only saying if price comes down to here again, it will come through here with purpose and should at least take us to our TP1. Now, that said, you'll note that the overnight candle, or the transition candle between night and day, if you like, or end of US, beginning of Asia, would have, depending on where you had your entry, of course, gone very, very close to taking you into this, and you wouldn't be feeling that great right now with price exactly where it is. But I haven't done that, and we do have an order set short here, so I'm more than happy to keep that in the market. If I'm, I won't say if I'm wrong, because if it doesn't come down here, doesn't mean I'm wrong. It just means the market's gone in a different direction, and the entry that I thought may have happened won't happen. So I'll keep the W word aside for now. So the entry, if you want to follow this one, is at 0.8749. Got a stop loss of 30 pips. I've actually traded the break of this bar, but I'll put my stop above this bar. So it's a little bit of a combo, there. So that's where my stop loss is if we do get taken into this. I've got a first take profit at 15 pips. I'm going to knock half of it off at that point, just in case it finds support and then goes to the other side. But if we get a free run here, I'm just going to leave everything open and probably look for targets down around the lows. So that is euro pound. Really interesting, Ash, that I'm actually adopting this stance because the fundamentals are telling me different on the pound, definitely. But this is a very strong signal for me. So I've got to place it. I've got to take it, and we'll see how we go.
Yeah. No, I agree with you. I mean, the numbers coming now from the UK are very, very weak, and I think that the only reason that the pound holds on at all is because of the the potential that there's a deal in Parliament, and then probably the anticipation that the numbers will start to improve. The euro isn't particularly positive either. However, we've seen some numbers already today from Germany that were fairly weak, and we know all about Italy, and we know that Germany is also starting to contract a little bit as well. So it's a little bit of a difficult trade fundamentally to kind of figure out who's really worst off right now, but they will both be affected. I think that's the key when it comes down to anything to do with Brexit. They're both going to be affected, so then we can get back to normal numbers. But yeah, I agree with you on the fact that the pound is in some respects surprisingly holding up quite as well as it has, and the euro too, actually. I mean, the euro, this is a tricky one with the euro, isn't it? Because it has broken through significant levels. There's another significant level at 112.15.
Yeah, here.
And it certainly looks, by all intents and purposes, that that area may well be seen now and next before it starts to move significantly to the upside.
That's kind of where I'm at. Yeah, my analysis is that as well.
Yeah, there certainly looks like there's a lot of weakness out there with the euro. Going to be interesting to see how this week's bar ends up with the euro. So over today and tomorrow, it'll be interesting to see what the bar is, whether it does actually produce something that would look like a hammer. Can't really, because of that low that we've got back in November. But let me quickly show you. In fact, is what you're looking at pretty much covered?
Mate, that's the main thing. That's my main focus for today. A couple of other things I will be looking at a little bit later, but I'm very interested on the three: the pound, the euro, and the euro pound together. So I think there's maybe some trades coming our way at some stage. But
okay, great.
I've just got to duck off for 2 secs, and I'll be back.
Yeah, go for it, mate.
Tell us what's happening around Footsie Town, then that'd be good.
Yeah, well, let's take some of these into consideration as well. So when it comes down to the pound, really all this tells us is that the price action is just very, very tricky to read, because even when we have these trend lines, it has looked like we were going to actually start to rally to the upside. And I know there's some people that took some trades in this area. The second bar, this is quite an interesting bar here, and it's interesting because if you trade a strategy of breakout, then this second bar wouldn't have been in your mind, in your strategy thinking at all. But if we consider this bar on a break and back test kind of strategy, then if we look at this area here, which it is pretty clean. I'm not sure what the lower pattern is. It's like a falling wedge here, but the falling wedge was broken through fairly significantly as well. That's a decent close above. When certainly I'm looking for a break, I want the break to be a decent close above above the range. And there are other, there are different schools of thought on this. But if you go if you want to be fairly safe, then you're going to go between 3 and 5% of the range. So just to bring that into context for you, if this is 142 pips, so the actual the measured move of the falling wedge will be 142 pips. That means that you're looking between, let's say, 5 and 7 pips break to make sure that you get that 3 to 5%. Yeah, sorry, yeah. So that would be plenty. To the upside. So that would have been plenty, especially with the close there. Let's make sure we do that right, actually, for you. 140. $140 leads us to 14. Sorry, 3 to 5, 10 to 15. A 10 to 15. So anything from here, there, you see that close, that would have been it there. So between 10 and 15% break. So that would have been a pretty good sign that that you could go long, and even long on this candle. Some people would be quite happy, especially with such a good move. It was well over the 10% break. So with such a good move, there would have been entries here. But this candle here is quite significant, and I think Jeff would probably quite like this candle for. It might be a little bit long, this one, but he'd probably quite like this one just for shaping up to put an entry at the highs and a stop at the lows. But
yeah,
the problem with this,
I did have a look at it this morning, mate, and
yeah.
What I thought was, yeah, as you're saying, very interesting candle. But what I couldn't work out is how I was going to erase the weekly pivot. So that was my
main I completely agree, and that's where the when we look at strategies, this and this is the other steps, but the nuance comes in when you find certain levels that you're trading into that you might decide that particular trade is not for you. Sometimes you might find it's fine, sometimes you might find it's not, and as I said before, that's where you have to be a little bit creative with every strategy. But the fact that we had a break and the back test wasn't a test, it came right the way through, and that's the significant thing, is that a test has to be a test that doesn't close below the area of breakout, and especially because it had closed below this monthly pivot. Now, if the weekly pivot wasn't there, then a break above this level would be pretty bullish because it would suggest that there's follow through. But without that coming into play, and then the next bar effectively testing that level again and closing beneath, that was starting to look pretty bearish. So the bulls had given up. By the time this bar had closed below, the bears had won the battle. So even with this bar here, to try and drive towards the line one more time was probably more likely going to fail, and we start to just drift to the downside now. So the pound is in a tricky little spot here, and certainly as the day passes, I'll be looking for further bearish price action, or maybe even a trapping of some sort. This is the new pattern that we have to draw now. So I'll be looking at a trapping of some sort within this range. Not really that keen, so I wouldn't be too keen on the pound. Tomorrow we get retail sales, which could actually move this out of the range, but before that I'd probably anticipate this staying pretty much within these levels, which if you manage to kind of get the trade right from the highs to the lows, you'd still be getting 120 pips out of the no, there's not, is there? And my preference right now would be continue to look for the rallies to short this one, because I don't really know what's going to change this one around unless we get this guy Vli kind of coming out and saying something which could be positive. He's a UK MPC, isn't he?
He is, mate. Yeah.
Yeah, as I say, I've never heard of him either. Even from the monthly pivot, there's 100 pips. So you'd want to let whatever he's got to say probably pass first. But the pound, I'd be fairly bearish on just for right now. even though the longer term area looks pretty good for some upside, I would want some kind of obvious catalyst before I hopped into this one. And that obvious catalyst would be as low as maybe that point there, 128.20. So somewhere in this area would be as low as I'd really want to get to with the pound. I don't know what that tool was, unfortunately.
What's the fib on the whole move, mate?
The fib on this is... you mean from down the bottom there?
From the other way, yep.
Brings us to 50. Actually, that's pretty nice, isn't it? Because that's right on my 28.20 level. Yeah, 1.2820 gives us a 50% fib. Now, I mean, this is interesting because, you know, and I hadn't even considered that we could be looking at a fib. So let's have a look at it like this. Now, I want to show you this one more time. And I've probably said this quite a few times, but I just want to show you why this fib is actually even more significant. So if we're looking for confluence in an area here, and we're looking for this 50% line, there is a slight question on this, which I'll bring up in a second, but this is what I see at this moment. Now, this is the only area. So that's what I see. The one area this could potentially fall down is this this move here. You know, but hopefully you guys can see that there's actually quite a lot. You know, if this is a left shoulder head coming down for the right shoulder, which needs to be a little bit more shallow, actually, that does mean that we may well have possibly this week to pass, and then we could look at next week for a little bit of upside. The fib helps. Maybe give some validity to the trend line. The trend line is a little bit difficult because of this bar. The inverted head and shoulders is a little bit difficult because it might end up being that little bit wider. And the one reason that I've drawn my my inverted head and shoulders slimmer was because of the deal, the Brexit deal, and I would suspect we're probably much more likely to get movement from this area within the next few weeks, rather than waiting. You know, well, actually, it wouldn't be too bad. Actually, looking at this on our center point, that's 19 that way. Let's do that one more time there. No, it's not. Yeah, it's 19 that way, which gives us 19 about here. Yeah, you see that's the end of April, which is going to be too late for the Brexit deal. Now, just quickly to the FTSE. FTSE is much more likely to rally into this area now. You know, the probability of moving to the upside is has increased quite significantly, and I won't be. There's a possibility that this area might hold on. So the 71.70, which is about for UK 100 traders, you're looking at around about 72.15 or something like that. It looks like it could well rally to those highs, but probably beyond. You know, I see the next level around about 72.50. And again, for the UK 100, you're probably looking around about 73 for the rally to continue into this level before looking for a dip. It's possible that, as I say, it stops here and I'll remain supple, but I'm still looking for downside. Now, somebody was asking me the other day, I think it was Christo, why would I only trade one market? Well, I think the last 1, 2, 3 weeks have really shown it. If you look at the lows to where we are now, this thing has gone up 500 pips. And I'm not saying that you would have got in right on the low, but there was actually a little signal down here. And if you'd managed to grab that low, unfortunately, if I miss my trigger by 5 minutes, I'm pretty much done because you know my my strategy really does try and involve, picking the swing and then the swing and then the swing. So I missed the initial trigger, but there would be people that were getting in down here, and this is more really a comment on why it's fine just to trade one particular currency pair or instrument. Because if this is a 500 pip run and you'd had a stop of, let's say, 50 pips, that may well have given you a 10 to 1. If you'd not managed to get quite at the lows and you managed to get somewhere up there and you managed to grab some of it in the middle, and you still got a stop at around about 50 pips, which is a decent wide stop on the FTSE 100, then you're looking at an 8 to 1 or a 7 to 1 or a 6 to 1. There's so much in this, and we're talking about that within 3 weeks. So 6 to 1 potentially in the course that doesn't even cover the time range of a month, which is the reason that I think it's okay to just be looking for one particular instrument when you're trading. But
I think it's actually more than okay.
Yeah, well, exactly. Yeah, it's what. Yes, yeah. Well, we were talking about this the other day, mate. I think this is the day you were travelling. We really did have a session of education, and I was talking about
nice sort of psychology session. I love them.
Yeah, well, just the fact that both of us really keep our analysis of what we have to look at to a pretty much a minimum. I mean, I know you probably look at 5 crosses. If you include the Aussie and the pound and the euro pound, euro dollar, and maybe one other, maybe Kiwi.
Really, I don't. Really, I'm only looking at the Aussie, the pound, and the euro against the dollar, and then everything falls into line off those.
Yeah. So you're looking at 3. I mean, and I look at 1. And that's and there's a lot of, I think there's a lot of validity to doing that, because it means, and what I was trying to say to the guys is that if you can get to know your internal market, to start with, or picking one that that you can mine enough for enough information, then it's really good to get to know one and get familiar with one, because it does mean that your technical analysis can fall into line with other things then. But I quite like being specialized in 1, 2, or 3 in your case, to actually get used to before having to open up every single chart and trawling through. Now, as you made the point before, which I really liked as well, you either get good at a
currency pair or an instrument or a strategy.
Yeah. A small amount of instruments, or as you say, you get really good on a strategy, and that means that you can then use it against lots of other different currency pairs or lots of different instruments. So it's either a strategy or a pair that people should be, I think anyway, getting really good at. And I think that's in a lot of ways you learn a lot faster, and in other ways the point that is most key here, in other ways you don't need much when you can see that there's 500 pips on offer in one move in one direction. So it's not even that you're going, right, I better get out, get in, get out, get in, get out, get in. You could have traded this in one direction all the way there for the whole month, and currently be 6 to 10% up within 3 weeks. So that's the benefit of just trying to get good at a market, and also the benefit of patience as well, and seeing if you can let this run. Now, I have to say, if I'd managed to get in at my entry, this would have been my entry bar here. There is an inverted head and shoulders. If not that entry bar, there's another entry bar here, which maybe for a lot of people would be better. I'm just going to bring this onto a pivot chart just to show you why this one was possibly better here, and that's because we got the daily pivot and the weekly pivot. So really good entry bar there. So I would have got out at this point. As soon as I'd seen that high, I would have got out in this area. So I'm not saying that I would have managed to grab the in this particular run 120 pips that are on offer. Now, I'm not talking about the very first move down here, because there was also an entry here, another inverted head and shoulders, left shoulder, head, right shoulder. This is an entry bar here as well for me, and I'll show you why. That breakthrough there, just pipped his head up, came back, tested the line, didn't go through it, and then you're off to the races with an inverted head and shoulders. So there was another one there. I'm not quite sure where I would have got out. I probably would have trailed stops on that one, so maybe I got out here if I'd managed to grab it. Well, that was the big one, actually. And then there was another entry here, which is currently 120 pips up. But I would have got out at the highs, to be fair, because that would have been a point of contention for me. And then we're waiting for something else. But you know, this could well be the retail money at the end of this this particular run. So I'm not too concerned about missing moves. And this is the other thing about it, is that as it happened, I would have definitely got out here actually, because I shorted this up here. So currently I'm 2% up from this little run here. So even though there has been maybe 10% on offer to you know, in one direction, there was actually a little 2% on this particular run here, and there will be another opportunity at some point during the month for me to grab a little bit more. So I'm only a couple of percent up right now, but I'm certainly looking for at least another 5% at some point this month, and I am still looking for the downside. I'm not interested in jumping on board here. I'm not really that bothered that I've missed this particular run, because there's two reasons that I'm not really that fussed about missing this run. The first one is that I know there'll be an opportunity to get a trade that will give me the profit that I want for the month. And the second thing is that I was looking for downside. So if I was on board, I'd be on board in the wrong direction and sweating this out right now. So I'm not too worried that that my analysis. Well, I mean, maybe the analysis, you know, could have pointed me higher, but I have to consider the fundamentals that are out there. Now, one of the reasons that this has managed to rally without pretty much any interesting, it's come right off that 71.70 there, pretty much. The reason that this has managed to rally without any respite to the upside is because there's really a lack of data. You know, there's a lack of something to keep it going. So what my belief is that the FTSE is really staying afloat right now because of a lack of news, not because of news and data. The data hasn't been particularly good. We consider that you know, we've got CPI out of the UK yesterday a little bit weaker, and as you pointed out, Jeff, is coming off and coming off and coming off. So it's starting to dive to the downside. We've got Mark Carney saying that the Brexit waters are going to probably shrink the economy either way from here on in. We've got a weaker pound, which is probably the reason the FTSE is driving higher. We've still got this this issue with a trade war between China and America. So there's not really a lot for me to go, things are positive. The tailwinds are out there. You know, couple that with the fact that Germany is starting to contract. Couple that with the fact that you've got Italy in a technical recession. Couple that with the fact that you got China starting to contract, and it doesn't suggest to me that the fundamentals are for a stronger world economy that the FTSE 100 is so exposed to. So I'm not interested in upside. This can go as high as it likes, because what it does for me is, if my theory is correct, what it does for me is give me a better price to go short, which is exactly what I'm doing, or what I'm waiting to do. Sorry, mate, you were going to say something.
No, I was agreeing with you. That's exactly what it's doing. It's giving you the price that you want, rather than the price that you have to accept.
Yes, absolutely. You know, it's the other thing is about the FTSE. Now, there's two things that when I see this chart, there's two things that really shout at me. The first thing is that, now this isn't always the case, but when I look at a rally, I see a rally very similar. I'll come to that in one moment. One moment, Christo. When I see a rally, I see a rally very similar to a gap. Now, it doesn't always happen, as I say. It's not quite the same as a gap. The philosophy of the gap is that a gap is always filled. which I think is a completely misleading statement, because it suggests that the gap will be filled within a few sessions, and that isn't the case. The market hates a vacuum, but that vacuum may not be filled for many years at times. So so I don't think we can take too much heed to the gap analogy, except for the fact that I look at a rally or a movement in the market in the same way. So to me, this point here to this point here creates a gap. Now that means that this area is likely to be tested. So with this run moving to the upside, that suggests that this particular area, this particular test area, will have to close at some point. You know, I wasn't expecting it this early in the game. I was expecting it to come up, come back to give me the right shoulder of an inverted head and shoulders, and then start to go up. But that's not what's happened. What's happened is that the rally has managed to catch some wind, and the momentum is continuing to shift it to the upside. It doesn't mean it's going to necessarily get there. This could still fail in this area and still give me the inverted head and shoulders and then go up. But it's certainly looking more likely that we close the gap. We're not that far away from it. So we're not that far away from retesting this area. So that looks more likely. Now, the second point on that is that means that this area has not been tested. So then what I will look for is for this to come back into somewhere around about this point before looking more confidently at a rally to the upside, which would sustain. So this is the reason that I don't look at this particular rally as problematic or as missing the boat and thinking what's going to happen here is this. You know, I don't. That doesn't really concern me. I think there's far too much out there that would suggest that that wouldn't happen anyway. But just looking at what I've got on the page on this daily chart, the price breaks and it tests where it broke, then it goes down. It breaks, it tests where it broke here a little bit later, and then it goes down. It breaks. Now it hasn't tested where it's broke, so I'm waiting for that to happen. It comes down, it breaks. It tested the break area here, and it comes down. It breaks to the upside, tests the area that it broke from, and then it goes up. So far, we haven't had this, and we haven't had this. So moving into this area doesn't concern me one iota, and it doesn't make me think that I've missed anything whatsoever. It just makes me think, great, now I've got a bigger area to come back and test from. So anyway, mate, that's really my
yeah, cool,
2
mate.
penneth worth on the FTSE.
And what you've really just described there is what we spoke about weeks and weeks ago. Plan. You've got a plan. You're not just opening the chart up and going, okay, this looks like a great candle pattern, let's jump in.
No, absolutely. It's got to have context.
Mate, we are well and truly open, of course. Sorry, if there's more, go.
Yeah, no, I was just going to get to Christo's comments in the chat box. So Christo was saying sound advice to specialize. FTSE seems very profitable when things fall into line. They all are, mate. This is the thing. I wouldn't worry too much that I particularly trade the FTSE, and that's what everybody should go for, because I trade the FTSE, as I said before, because it was the first one I was introduced to, and I'm in the UK, so it makes much more sense. If somebody did introduce me to the pound, I think I'd be in just as good shape, because I'll be still able to understand the news that drove the pound, and it'd be easy for me to mine. But yes, you know that specializing is more the key. Because they are all profitable. It doesn't matter what you look at. I think you could probably find out of the majors anyway. I think you could find that there are some great runs in every single one of them. Even probably the Kiwi Aussie and the Swissy and the Euro Swiss. I don't know actually. Maybe that's probably pushing it a little bit. But the Aussie Kiwi might well be. Well, Aussie Kiwi actually is something that Paul trades
Euro
quite regularly. Oh, Euro Swiss, yeah, because that might be a little bit tougher. But generally speaking, the crosses will give you some really good moves. Then the next thing is, how much does commodities affect the FTSE? Hugely. I mean, the oil specifically is traded quite highly on the FTSE 100. In fact, let's get to that point in two aspects. Firstly, if you break down the FTSE 100 companies, oil is traded very, very highly. Oil is very is one of the drivers of the FTSE 100. We do have Royal Dutch Shell, and we have BP, and we also have things like Tullow Oil and many other oil-related stocks on the FTSE 100. So you get the miners, and then you get the producers and the equipment as well, all equipment. So oil for one is very important. Gold, we have Fresnillo, which would be very. I beg your pardon, mate?
You said oil for one, and I just said and one for oil. Sorry,
yeah, very good. We got oil, we got gold as well with Fresnillo. So and you could go through a list. So commodities play a big part in the FTSE. I think oil specifically, because it is actually one of the biggest sectors. Forget just the fact that you've got the individual stocks. It's a big sector. But the other side of this, and this is your other comment on iron ore and copper supposedly in short supply. That is key, because the FTSE is very exposed to the world economy, and this is why when the pound rallies or dips, the FTSE is hugely affected, because the profit lines are made in other countries. Generally speaking, the FTSE isn't an internal market. It's not a internally UK market like the FTSE 350 would be. The FTSE 100 is a global market, so it's hugely affected by what goes on around the world, because businesses will be in America, they'll be in China. Or let's say they'll be in the Americas, they'll be in Asia, they'll be in Africa. So they're making their profits in other parts of the world. So if the pound starts to shrink in value, if the pound devalues, then it's good for the FTSE, because it means that when people bring profits back, paying dividends to the UK shareholders, actually they're making some pretty decent returns because of the exchange rate. So one of the aspects is that the FTSE is a globally affected market, and iron ore and copper are important for global markets because they suggest growth. These are two commodities which suggest growth. So if you see the copper price, I haven't got iron ore, unfortunately, but I've got copper. Where's copper? Right. If you see copper moving to the downside, now I'm just gonna kind of pick this off for you, and I'm only gonna pick one section. I don't think it's important to pick too many. But if you see copper moving to the downside, as it does here, between December of is that December? Yes, it is. December of last year, right the way up until January of this year, and then we start to rally. And then compare that particular movement to the FTSE. It's pretty much the same, right? Down and up again. So things like copper are really important for a barometer for the rest of the world, because it does suggest that there is building going on, and that's the key. Countries, specifically China, when there is a boom in the Chinese economy, then building will be done, infrastructure will be laid, offices will be built, houses will be built, roads will be laid. So this is a really good barometer for the state of the world economy, and that has a knock-on effect to the copper producing nations like the Aussie, for example, and iron ore. So if there is a lack of supply, what's that? Sorry, buddy.
No, I just said, oh yeah. If the circumstances you just described occur, yes, then you'll see the Aussie go through the roof.
Yes, so this is where they all start to becoming interlinked, and this is where it's really important to understand a little bit. You don't have to know a lot about this stuff, but you need to know a little bit. And actually, what I'm telling you is pretty much what will be a really good basis for understanding, how some of these things work and how some of these things move around. So
correlation is very important.
yes, correlation is really important, and understanding how that things correlate is really important. But not to get too bogged down with it, because all of a sudden you're going into the fact that gold is going to the upside, but gold stocks are going to the downside, and then you have to kind of mine further and mine further. So you just want this as an overview. And because from one time to another there could be different things pushing and pulling the market, specifically the FTSE. Sometimes the pound will push and pull the FTSE, sometimes it won't. There was a huge correlation between the pound strengthening and the FTSE weakening, or the pound weakening specifically actually, and the FTSE strengthening not that long ago after Brexit. But then all of a sudden the correlation was snapped. So you have to be very careful that you don't say, this is the hard and fast rule. If this happens, this happens. It doesn't really work like that. There is nuances in there. But looking at gold, looking at copper charts and iron ore charts they will help you. Depending on what currency pair you are looking at, knowing that there is problems in the world market will help you when you look at then trading the yen. Because the yen is supposedly the safe haven currency, because they are a country that tends to have a trade surplus. So it means that they are, thought of as a fairly safe economy because of the trade surplus. But when you come down to what's been going on recently, the dollar has been a safe haven. So the way that the markets have been with all this concern, people have been putting money in the dollar because the dollar is currently paying a pretty decent dividend. It's the one that is raising its interest rates. So to have cash rather than stocks makes a lot of sense. So I'm not sure where I've gone right around the houses here. I've almost lost myself.
Yeah, we covered just about used to do with finance in the last 10 minutes.
Yeah, I'm sorry about that, Christo. But back to your question: how much does commodities affect the FTSE?
Oh, there's a question.
Massively.
Right.
Yeah. Sorry, mate.
Yeah, look, it does. It matters absolutely, and I think the most important point, or 2 points out of that, are correlation is a massive thing, but knowing when the correlation is broken is just as important. So they're the 2 points that you raised very, very well, and I think if you're serious about that, Christo, then yes, you need to be careful around it, because it's not hard and fast, as Ash said. It's very much a case of, okay, this is the norm, but guess what? The norm is not very normal. It doesn't happen often, to be fair. There's always days where you've got Donald Trump tweeting something, where you've got Theresa May going back to Parliament in the current climate. You've got all sorts of things. China doing deals with Trump on the outside. Trump not having a wall built because of the Senate won't let it go through, and all those sorts of things that come up on a day-to-day basis can skew that hard and fast not rule, if you like, to be very, very unreliable. So yes, it's very important to know what correlation is, but it's also very important to understand that it can be broken very, very easily. Okay, we've got a lot of movement in the market at the moment. Let's take a look at some currency charts and see what we can find. I'm going to go straight to Euro Yen. Why? It's a good question. Just happened to be looking at it is really the answer to that. And what am I looking for here? The only way I can analyze a currency pair or anything else is to go wide, and I've got to start at the very least with the daily. And when I did that this morning, I saw Euro Yen, and Euro Yen's a bit of a funny creature. It does things that other pairs are reluctant to do, and by that I mean it plays funny little games with wicks, and I like to play wicks on Euro Yen. And
do you know what? Sorry, mate. Do you know what? I remember the Euro Yen. We were talking about this the other day, weren't we, on a daily wave rider?
Oh, yes, we were. And what was the result of that?
Well, it needed to break down, and it didn't break down. So there shouldn't have been an entry on it for sure. But it was just I think we were waiting actually. If sorry to take you off your
No,
stride here.
no problem.
It was just where is the daily wave rider? There it is. Yeah, it was waiting for a bar. In fact, yesterday's bar that suggests that there is a daily wave rider today as we go. Perfect.
Except that I'm going the other way.
So that's okay.
Well, I didn't trade it. I didn't trade it at all. But it was so tempting because it's kind of one of the setups that I do like. But when I looked at the Euro chart this morning, I thought there's just no possible way I can trade this long right now. I've been trying to do it and managed to get the one move, thank goodness. But since then, nothing. And it's intriguing now to think that you'd be wanting to go long, but guess what? If I see the right scenario, I will. This candle here is not such a bad thing. I'd like to see now a strong candle through here. And if I did, then I'd jump in again. But I'm not at the moment thinking anything but seeing what happened yesterday. And what happened yesterday was another piece of carnage. But more importantly than that, it took out this low. And that's a very significant thing for me because it's broken the bottom of the range and now put in a new low since, retested almost the bottom of the range, hasn't been able to get above the daily pivot. For all intents and purposes, this looks like a bearish day for the euro. I'm not saying that's going to happen, but at this point in time, that's how it looks. And when I looked at it this morning, that's exactly how it looked. I felt daily pivot test, bang, gone. Maybe that won't happen, but at this point in time, it looks as though it would. And that's why I took the position on euro pound short, because I thought the pound may rally because it was at a support level, etc., etc. That hasn't happened yet. If it does, well and good, but if it doesn't, it's of no concern. But going back to euro yen on the back of what I've just said, if I'm looking for a euro rally, I don't see it in the euro chart. And because there's resistance there, and we're at a resistance level, mind you. So whilst that's a great little package for me, normally, I just can't think long euro at the moment until I see that turnaround point. And at the moment, it's simply not there. So euro yen's no good for me. I was going to look at the 30-minute charts, wasn't I? And that hasn't happened. Let me get rid of a few lines here.
So the euro yen would have been a long.
Yep, would have been.
Yeah, okay.
But I just couldn't trade the euro long today.
Yeah,
at this point anyway. Against anything. Yeah, look, this is a really interesting bar. To be fair, I've got a little scenario that says if this breaks false to the high side of the, and it's normally the range of Asia, then there's going to be downside for the rest of the day. But I don't see that either. To be fair, the range on Asia was like there. Whoop. So we're really back in the guts of it when we haven't broken through it. We've broken through this little part of it, but really this is talking range to me, and I don't see any way to trade it right now, especially with a candle like that. It's way too big. So let's get off euro yen. Now I've described to you exactly what I was thinking. Aussie looks like it wants to range as well. This is the hourly charts, and I don't really see anything here that entices me to think I'm going to trade, except that, again, we've got a big pullback bar, if you like, off the rally. That would normally get me interested. But again, the weekly pivot is it's like a cap, and to get through that is going to take some effort. That said, there's bullish signals here, no question. On the day, we've hit the daily pivot, bounced off it, and then smashed through it. Couldn't quite make it to the weekly, and now we're smashing off it again with the second candle, pardon me, of UK session. I can't trade into this resistance area, even if I wanted to. Do I want to trade the Aussie long as well against the dollar? The answer has to be no, I can't until I get back down here. If I got down here, maybe, but not trading into resistance. Just doesn't work for me. If I got down here, fine. And maybe that's my focus. Can't trade down there right now off this big bar, so we'll just leave it alone. There's my rallying cable that you can see that's just going nuts to the high side, isn't it? Not. Let me see if I can work something out here. Daily chart. Yeah, that's the thing. It is the daily chart that enticed me to think there is a potential long here. So significance in that level, that 128.47 level. And here we are. So two possibilities here. Number one, this is the 4-hour chart, of course, so it can happen on any chart. This candle closes, let's say where it is, it's taken out the low, and then the next candle breaks, or doesn't even break, it retests this 128.47 level. That's a bearish signal for me, but if it fails to retest that level and goes into consolidation here, that's a bit of a potential bullish sign. But the close against, or the close below both the trend line and the level on a 4-hour chart is quite significant. It's going to be really tough to trade around that long. If, however, on the hourly chart, we fail to close below there, or even if we do, again, we'll look at a trend line coming up through here. We'll look for a sign that we'll get a retest, or we'll get consolidation. And that will be the signal for me. If we get a retest, it's pretty much short bias. If we don't, then I'll wait for price to get back above here, and then I'll look for a long as a result of a back test from the high side. So nothing clear. And this is probably a little bit boring, if you're looking to trade heaps. Both Ash and I are not. We're just willing to trade what we consider are going to be good trades. And I don't see any right now. That's for sure. And when you've got price action like that, it's going to rule you out for a little bit as well. But it does give you a good indication as to what's going on. So euro dollar's the same. This would be, again, as I said yesterday and the day before, and probably the day before that, this must look absolutely juicy to a trend trader who finds trend continuing, a new low, off a resistance level, being let's go short. And that's what's driving this right now. That's why you're seeing that, because trend traders are all over this. They can see a resistance level. So what do you do as a trend trader? You buy the dips and sell the rallies, right? So once you hit resistance, that's why you're seeing this right now. The question becomes how sustainable that is. Are they going to take profit here? Are they going to drive this further? Good question, don't know. But I'll be looking for signs that they're just going to take profit here, and then this move becomes valid. I won't know that until I get some signals. The first one will be if it takes the low out. Next one will be if it doesn't, what happens next, etc., etc., etc. But, we can go on forever like that. Okay, had I been taken into this euro pound short trade, I'd be in desperate trouble right now, a couple of pips from my stop loss. There's a thought process that if your stop loss is hit, not in the trade, that you cancel the order. I kind of get that, but I also kind of get that I'm not ready to do that yet, because of this line here. And this line here is the bottom of a channel. And I think I said this, well, I did say this earlier. I've been saying it for all this week. you can see how significant this level is. You know, like or lump the channel. This is so significant because price just can't break through there. It can't get there. Yet it has with this bar on yesterday. And then we've had a retest. So this is still valid for me as resistance. And until that changes, then I'm still of the opinion that price will fall. So I'm hanging on to that. That will change, of course, if there's a close back above here. And then everything becomes a new ball game, because that then becomes a potential false break of the bottom of this channel. And as a false break, we'll be looking to trade in the opposite direction. So, yeah, cause and effect is where I'm always going with that sort of thing. I can't imagine why the Aussie's rallying, and against the dollar, it's not currently, and even against the yen, it's coming off, of course. There's no way I can trade this anytime soon, because I need this move to settle down and tell me exactly why and what's going on. There's potentially even a fundamental reason why this is happening. I don't think there's any news of any concern right now, but you can see that the pound is falling, the Aussie is falling, the euro is falling, and even against the yen, which appears to be rallying against three majors. How are we going cross pairs? Euro CAD. So Euro's weak. Aussie's weaker. This is probably the one I'm most interested in. But there's no setup right now. But I can see a nice little double top sitting here. You could be forgiven for saying this cross is overbought. We're at the top of this channel. We're at the 200 moving. I don't even know why it's on my chart. We put it on there the other day, but I don't use moving averages. But let's leave it there because it's convenient for now. It's telling me there's a resistance level. There's a confluence of resistance. So I am cognizant of that. I'm aware that we've got an overbought scenario. So I am actually looking for a pullback here. So I'd be willing to trade the retracement if it's to be that. If it's to be a reversal, then even better. That's why I've got these lines on my chart, these yellow lines. I'm looking for something to trade from. But I think if I can get an entry around here and trade it down to here, and then look to get myself safe, I think that's probably the way to go. Because, of course, this level here, just like we saw on the euro, where we've come daily pivot bounce, exactly the same scenario in the opposite direction with potential daily pivot bounce. And there's a confluence there as well. So that's why I would be looking to take profit at that level. I think that's really my play. The only play I've got right now is to find a short here. And I need this to break, and then a little back test or retest of there does get me interested down to this area. So dollar yen, mate, I think is probably the earliest opportunity I'm going to get to jump into the market.
Yeah, it's interesting actually, isn't it? But I mean, normally, well, not normally, but regularly, I think you manage to find multiple entries throughout a week. But it's been a, I'm not going to say a tough week.
Particularly on a Thursday.
Yeah,
actually,
yeah. It's just been that I guess because we're just seeing follow through in the direction. There's been very little kind of pullback. It has created a trickier environment for us to trade in, isn't it?
Yeah, look, interestingly, when you analyse that just a little bit further, the only trade I have found and the only trade I have entered is this one here, euro long to here.
Yeah. Well, for the week.
Yeah, that's it. It's the only trade I've placed. So, well, that's not true.
Yeah.
I've placed a couple on the daily charts, but neither has triggered, and it looks very much like that's going to continue. But I'll be looking again tomorrow. I'll look again tomorrow on the daily chart and see what this looks like, euro pound. But if it
even though
gets
it's a
above,
Friday,
even though it's a Friday, because that's a strong signal for me. If that continues to be the case, I don't want to wake up on Monday with price 200 pips to the good and I've missed it, because it is such a strong signal for me. Sorry, 4-hour chart I'm talking, not the daily chart. So I'll continue to look at this, and if I continue to see potential entries, then I'll just move my entry up until I get it. And if I don't, guess what? Ain't the end of the world. Like we always say, thank God trading is not compulsory.
Yeah, well, it is just a big waiting game at the minute, isn't it? Christo's just put in a question. If the trade deal is favourable, I guess stocks go up, especially the Dow. Absolutely. So does that make the dollar go down? Aussie and yen go up. That won't be binary. I'll come to that in one moment. If Saudi Arabia say they're going to cut oil, how far does that affect the markets, FTSE or commodity currencies? Oh, that's really interesting. Actually, I think they're both really interesting points. And actually,
Cut oil production, Christo, is that what you mean?
yes, if they're going to cut oil production, yeah.
Well, they've been threatening to do it for weeks and months, and haven't as yet. But
that's
yes,
the problem.
most definitely, if they do, then the price will go up.
Yeah, this is the thing. I mean, it's a slight problem with that. Certainly we can come to that in a little bit of detail. The trade deal favorably will affect stocks and go to the upside, especially the Dow. So does that make the dollar go down? No, not necessarily. So a trade deal being good for the United States stock market won't be the driver that brings the dollar down. What you'd have to wait for in that particular scenario, in actual fact, is pretty much more likely to make the dollar go up. And I'll tell you for why. One of the reasons that Jerome Powell has held off further interest rate rises is because the market had started to weaken. So as the market started to come down, Donald Trump and others put pressure on the Fed to stop raising interest rates, just to see whether they could boost the economy back up a little bit again. So they wanted them to row back, and their term was to listen to the economy and see what the economy needed. And the economy didn't need further tightening at that time, because while the dollar was tightening, people were moving their money away from stocks and potentially putting them into cash. So if the stock market starts to go up, the likelihood will be that Jerome Powell will probably look at it and go, okay, so the economy can now take another interest rate rise. And in the longer term, let's say the medium term, the most likely scenario out of that will be that the dollar will strengthen rather than weaken, if that was binary. So Aussie and yen go up. Well, the correlation between those two will be to a degree internal. And obviously, if the dollar's going up, then they will all be affected, one way or the other, whether they're affected hugely or negatively. We'll see. But certainly, if we start to see more confidence in the stock market, the yen will likely be affected to the downside, and the Aussie will likely be affected to the upside. So you do pick out the two currencies which do actually have a correlation to the movement in the stock market on that particular front. So yeah, very very likely they will be affected. Aussie positive, yen negatively, but also the dollar will probably be positive as well over the medium term. So I'd probably be looking at Aussie versus other currencies rather than the dollar, and maybe yen versus the dollar would be great, because if the dollar moves up, then the yen potentially moving down could really start to accentuate that if we get that trade deal. So that's really well picked up, I think. And
is
also,
that a time thing? Is that due? Is there a time?
They were meant to be meeting. I mean, the date might be slightly wrong, but somewhere around the 22nd or the 26th they were meant to be meeting. But as far as I'm aware, that's off, or that was never really arranged in the first place. So yeah, there is meant to be a meeting of minds on the trade discussion, but they're kind of always going on in the background, but we just haven't had any announcements yet. So I guess when it comes down to that, that's going to be if we get an announcement, maybe if the trade deal is favourable, it's probably a decent way to put it. If we finally get an announcement on a trade deal, then all the things that Christo is saying there will be affected. Saudi Arabia saying they're going to cut oil won't be enough to move the oil price, because as Jeff says, they've been kind of threatening for a while. They would have to make significant movements to actually do it.
Yeah, they've got to do it. Yeah.
Yeah, for the oil price to start moving up, and it's not just Saudi Arabia, of course. You know, it could be for many different reasons, but all these things are so nuanced, because you know, if we just said, if Saudi Arabia cut oil, does that mean the oil price goes up? Well, on the whole, yes, but by the same token, Iran might start to come back into the market and produce a whole lot more. So Russia might release a whole lot more. Canada could start producing a lot more. So it won't just be that one player and that one specific headline. It would be more likely an OPEC thing. OPEC being the kind of governing body, if you like, of the major oil producers. So it's more likely to be an OPEC story than Saudi Arabia specifically, I would suggest. Obviously, the question's hypothetical, so it's a pretty open answer if that's okay. But I'd be looking more at OPEC announcements maybe in that particular scenario. FTSE commodity currencies that will also, yes, be affected by that. So if you were looking at going long BP, for example, then some sort of cut in supply would very likely help that particular stock out if there were no other factors involved. Have you got anything to add on that, mate? Hopefully that's pretty much covered it. But
no, mate, you know what I'm like. Don't give a toss unless it happens. So
I mean, we could talk about the charts on that front, but I'm not sure that there's even much. And I will quickly check. Oh, actually, it looks like Brent. WTI has had a little bounce, interestingly.
Yeah, look, I'm looking through my charts, and I can't find jack to trade. Nothing, absolutely nothing.
Well, I'm just going to have a quick look at this. I'm going to have a quick look at this euro yen. I want to have a quick look at this too.
Yeah, I had a look at that.
Okay, let's have a look at euro yen on the daily wave rider, just because it's the first.
So we've got an entry strategy, right on yesterday's bar that looks like a trade to me.
Yeah, I mean, the only one thing with this is the fact that we would have to squint a little to say it's bounced off the moving edge, because it hasn't really bounced off is the problem. Yesterday's hammer's kind of, and it's not really even a hammer, but it has kind of closed at a level of potential resistance there. But yesterday's move hasn't really gone up to a moving average, or hasn't gone up to the weekly pivot and then bounced away from it.
Ideally, you would like it closed below the weekly pivot, wouldn't you?
Well, this is the thing, and this is the way that I would prefer to play this now. I think we have enough information to suggest that there is a potential for a move to the downside. So I'd be okay looking at this, and I think we have two factors here. So we have this particular pattern that seems to have closed above now, which is problematic, and then also when we mine in a little bit, which is what I'd want to do with this. When we mine into the hourly, I would want to see, as you quite rightly point out, I'd want to see a cut below the weekly pivot, and that would also give us a cut below this particular trend line here as well. So a close below, a retest of the weekly pivot, and I think this is a short. So somewhere around about the 120, 170 still exists. I'm pretty sure that was the idea. At the start of the week, it might have been a close below the daily pivot at the time. I'm not sure, but as time has now moved on and we are on Thursday, I think it might be a better way to play this this daily wave rider. Don't play the daily wave rider because it's a little bit questionable. I think where that price action has bounced from. I like yesterday's bar as a master candle. I like the fact that we do have super trend red and we've got weekly pivot stepping down. I like the fact that the euro is pretty weak across the board. I quite like the fact that the financials coming out of the Eurozone right now are pretty weak, and that's not discounting all the macro politics as well, but political aspects of it and the macroeconomics to do with Italy and Germany's contraction. So I quite like this play, but I would want some. I'd want some further detail by maybe coming down to this hourly bar at the hourly chart. And as Jeff says, I think that the close below this area here would be the ideal, because just a close under here bouncing won't be enough. So yeah, it's going to be around about 124.70 for a return to the weekly pivot, and then lower. So maybe even 124.70 for a target price as an entry would be as probably as expensive as I'd want to pay for a short. But that was it. I had a look through any. I mean, if anybody's got any other daily wave riders, it is a strategy that I'm a little bit more familiar with.
All right, mate. I'm going whilst those questions are coming, I'll give you 3 scenarios for today if I am to trade.
Can I just tell you that Jeff, that Christo has said that, Jeff, that's great. Oh, that's good. I think I'll follow your approach, and that's the you don't give a shit until it actually happens approach. Don't think, worry so much. Yes.
It doesn't get you into the market too much on world events, but it does save me a lot of money worrying about if I'm in the wrong position at the wrong time. So
yeah. I mean, I think
kind of
it's a personal thing as well, isn't it? Because I really like the fundamental aspect of the market, but just because you're not so drawn to it, it doesn't mean that either approach is right or wrong. You could be purely technical and make better money than somebody that looks at the financials. But I have to say, the reason that I look at financials isn't about trading, isn't purely about trading. I'm just interested in that stuff. I'll watch just about every political show that's on TV over here, and I'll read what I can. Just about every story that there is, most of it rubbish. So it just interests me, and I think you kind of have to trade your personality, and if your personality doesn't really gravitate towards that stuff, then it's fine to avoid it.
Actually, Christo, don't get me wrong. I absolutely take notice of fundamentals. I just don't study them. It's as simple as that. I'll give you a case in point. When was it? Was it last week? Last week, yeah. There was a situation where, God, I can't remember the exact circumstances, but I think oil was at resistance and euro was at support or something like that. And there were, I remember exactly what it was now. There was CAD. Let me go back to Forex Factory. I'll show you exactly the circumstances. I think it was last week. Might have been the week before. Would have been Friday for the CAD, I think. CAD, there we go. So we were looking at, was it last week or the week before? Employment change. Let me go back to the week before just quickly. A lot of CAD news happens on a Friday for some reason. No, it wasn't that week. It must have been this week. Take me a week to find it, Christo. It must have been that, yeah, it was these numbers I was looking at, where we were forecast. That's right. We were forecast to go 6.5 thousand jobs created versus previous 9.3, which is, in anybody's language, down. Okay, 6.5 thousand jobs created, 9.3 thousand jobs previously created in the previous month. But the big figure is this one, and always is the big figure. It's the rate of unemployment that counts. And they were forecasting that the unemployment rate would rise on the CAD. So both of those figures combined give me a bearish outlook on the CAD Okay. And the euro at that time was at support, as I think we were talking about last Friday. Or Friday before last Friday? Last Friday. Which was, where are we? Thursday, Wednesday, Tuesday, Monday, Friday. Okay, so the news is due here, right? That bad news, supposedly bad news, is due here. So the market would tend to buy into that if you're trading anything against the CAD. And that's exactly what happened. And we got a beautiful signal. I can't remember what chart I was trading on, but we got a big bullish engulfing bar here. We got a double bottom, and then we got a higher low. So this entry here was just so easy to take based on those circumstances that I've just said to you. And if I didn't know that, then maybe I wouldn't have taken that trade because you've got bearish momentum here. So when I've got a technical scenario backed up by a fundamental scenario, which was fairly clear, it was obvious that there should be buying going into that, anything against the CAD because we're due CAD bad news. And that turned out to be a great trade. So don't get me wrong. If there's fundamentals that stand out and they're absolutely like dog's balls, then I absolutely take notice of them. So it's not a case of I'm ignorant all the time. I just choose not to study them as an art form. Simple as that.
Yeah. We've got a little Commons vote today, and just putting a few motions through the through Parliament. I was just reading whether it's going to be that significant. It doesn't look like it is. 26th of February looks like the next big date. But there are some significant Commons votes. So be careful of the pound today as well. There might be some shifts around in the pound just because of that, depending on what's.
Yeah, she's back again today, professing something. I think, Teaser, I think that's a great comment, and I enjoy it as well because guess what? It means I don't have to study it. I've got Ash doing it for me. So he tells me exactly what I need to know. So I think it's great. Yeah, I agree with you. Christo, what a great question. I was stunned yesterday that the fundamentals on the Kiwi were suggesting something completely against what happened. And I can't explain that. Look, I think we tried to explain that yesterday. And the only reason I can come up with is that the market was expecting something completely different. And it didn't get it. So therefore, the Kiwi rallied rather than not. What's the Kiwi done since then, by the way?
Well, that was the interesting point, wasn't it? Because we were talking about that, and this is the thing about some of these rallies. If the market does what you don't expect of a specific news announcement, then by all intents and purposes, it's actually quite a good.
It's awesome if you can get in on it. Yeah.
Because you can then trade it in the opposite direction when the market calms back down again. Because the first one looks like a kind of fat finger trade, and then you can kind of go, well, the news kind of said that, so why are we going up? And if we shouldn't be going up, then there's every reason to look for some downside.
And isn't that exactly what I said yesterday? I said,
certainly did.
if we get back below here and get a retest, just go short.
Absolutely, yeah,
but,
absolutely.
Me being an intraday trader, I don't go short thinking we're going down here. I go short thinking we're going to support, and I get out. And that's the key to my strategy and the way I trade. I get in on what I think is the right entry point, but I absolutely get out as soon as I think there's a support level or resistance level. Because I'm an intraday trader, anything can happen intraday. If you're trading trends, different story altogether. You can withstand all these little moves, but because I'm an intraday trader, I only go to a point, and that point is always very obvious. And in this case, that was very obvious. You've got the weekly pivot on top of the daily pivot. It can't be the weekly pivot. How can that be the weekly pivot? It's Thursday.
Yeah, it is the weekly pivot. You're right.
Oh, because it started here. Okay. Yeah, we'll see. They're so close together. As soon as I see that, the one thing I don't want to do is trade away from it, because that's like a big electromagnet to me. So there's no way I'd go long here based on that. It doesn't mean I trade towards it, but if I get the opportunity, yes, I do. That it's not there now, but that absolutely would be my analysis. I'd be trading towards that if I can possibly do it. So that gives you a little bit of insight into what goes on in my crazy head. And yes, when I say I don't give a hoot about fundamentals, that's not quite true. I don't give a hoot about chasing them, because Ash is there to do that for me, and I can stand on the shoulder of giants. Let's put it that way.
Very kind of you to say, mate. Well, we better shoot off. Abbas, you're very welcome, mate, and I appreciate you guys coming in and actually getting involved in the show as well. It's it makes it a whole bunch more enjoyable for both Jeff and I.
Absolutely true.
So there's not really too much more for me to add. I am waiting, I guess, just to kind of summarize with the FTSE, I'm still waiting on some market movement, which would suggest that I've got an opportunity to get in short. That short may be where we are. It may well be where we are, and I'm going to wait to see whether that's the wrong chart. I'm going to wait to see whether there is an opportunity here. You can see that we are right on the tip of this, the high of the move since November. So it's possible that it stops here. This area, I'm going to be all over it. So we're not too far away from there now, but I will be I will be on top of that. I'm about 60 pips away from the area that I want to be very, very keen to look for downside. And I will do, maybe even with a loose setup. I might just trade the level. So that is
How far away are we?
one.
I'll look at that. You've enticed me
Only
now.
60 pips.
You've enticed me now to stay up and watch this euro pound.
Oh, really? Okay.
Because I can absolutely see the pound doing something here today. Interesting.
Yeah, well, it might well be because of that.
Timing is everything, of course. It'll be hard to get the timing right, but I'll be trying.
Yeah, I got it's got to get through here, isn't it? Get through there, then I think if you're looking for upside, that is gets through there, then we're going higher. If you're looking for downside, also a really good place to look for short actually as well.
Absolutely.
Not sure what that'll be, but anyway, guys, thanks very much. We will be back Monday as always, same trade time, same trade channel. Otherwise, have a great weekend, have a great Friday, and make sure that you are patient. Sorry, just checking on the last little bits. I'm glad you enjoy it, Ben. Really, really glad. We enjoy it too, don't we, mate?
We do indeed, and especially on Thursday, because guess what happens after this?
Beer o'clock.
Absolutely.
All right, buddy. Well, have a great weekend too, and I'll speak to you on Monday.
You too, mate. Have fun, everyone. Bye for now.